and what we see most of our clients as well. So why don't we get started?
Sure.
Then? Yeah?
Sounds good. Thanks.
Yeah. So one thing that that strikes me about what you're doing in the strategy is you're not actually targeting tier 1 cities, right? Like this is like not like New York.
Yes. Correct.
Right. It's not Chicago. It's not right. It's kind of like when I talk to clients who are coming to Asia, their first port of call is to look at Beijing, Shanghai, right? But the way we look at it is actually the big opportunity is like Wuhan and like Chengdu and
growth cities.
Yeah, growth cities. So when what strikes me as interesting is that the opportunity set here is the Sun Belt. You call it the Sun
Belt region, yes.
Region. So this is Florida, Miami.
Correct. Florida, Miami, Pennsylvania, all the way to Phoenix, Arizona, Utah, and all the way to Las Vegas.
So my observation in the last couple of years is I've noticed a lot of our LPs in the U.S. have moved their families away from New Jersey, from New York, and out to Florida. Miami is a big one. A lot of our allocators are in Miami. They host some of the biggest LP conferences there. And it's very different from how I grew up understanding Miami, which is kind of this retirement
location,
right?
Old people, golf courses.
Right, old people, golf courses. So can we just maybe give us a little bit of color, because I'm trying to understand, number one, what are the economic reasons? There's political reasons, obviously, for these families to move. But what are the economic reasons, number one? And number two is, I'm always thinking about these things in cycles, as you mentioned. Are we late into the cycle for Miami and the Sun Belt, or is there still legs in where we're going? Because I've been hearing about Miami for pretty much since COVID started.
Yeah, since 5 years ago.
Since 5 years ago.
Correct,
and these cycles usually work in a 4-year cycle. So maybe let's start with that.
Sure. Well, let's start with why Miami. Well, as I mentioned earlier, taxes, right? Tax benefits in Miami, both local as well as state contributions, right? State is focusing on infrastructure developments. They want companies to move there. They want wealthy individuals to move there. So let's say a lot of wealthy individuals like Jeff Bezos, he also have moved to Miami. So high net worth individuals moving to Miami only boosts the economy by creating new businesses as well as buying properties. That helps in turn boost the local real estate.
So we're talking about like taxes, like take California, which is notorious for having really high state taxes.
Yes.
And we go to Miami, what kind of savings are we talking about?
You're saving, let's say, your whole state income tax. There's no income tax in Miami. There's federal tax, but there's no income tax. So if you work in Miami, you do not have to pay tax to the state. Only your federal tax.
Right.
And that's like upwards of 10%.
Wow, that's quite a bit. Okay. All right. And so these regions, so obviously it's tax, right? It's tax rate. Are there any other idiosyncratic areas of, so the second question was about sustainability, right? Like how far are we into the cycle? Because families can move across state really easily. And I have friends and families who move from Illinois to New York and then back, and then they're like, I spent a year here, let's move somewhere else. So, my concern, I guess, as if I were an allocator looking at these states, right, how sustainable is this mark, right?
I believe for like the company cycles, companies have recently moved there in the past 5 years. We don't see companies just coming there, staying for 5 years and leaving. So the job cycles, job opportunities will only continue to grow, or at least be sustainable. And a lot of, so Miami actually has been, not just Miami, but Florida, the state of Florida has been ranked one of the number one for startups now. Tech companies are arriving to Miami, arriving to Florida. Healthcare companies, healthcare startups, advanced health research are all being started in Florida right now. So there's a lot of new jobs being offered in this space. And a lot of requirement for these jobs are younger generations, professionals who want to explore that. And younger generation people also want to live in somewhere that's fun, somewhere that's affordable. So Florida becomes the state of choice. So not just companies are looking at Miami because of tax savings, but younger people are creating a talent hub in Florida. So companies want to find good talent. Miami becomes a location for that.
Is there an angle? We talked about sort of middle class young people moving out there. Your strategy, I notice, has pivoted from affordable housing during the last downturn.
Yes.
And now we're focusing specifically at Class A multifamily office, right? Which is pretty niche, to say. And is it because this is a less price sensitive demographic, and because I understand that there's also buyers on the other side once the project is complete. Is it a liquidity driven decision, or?
It's both. It's market demand.
Okay.
So essentially, starting off with the renters, stability of renters when it comes to high price rentals is much more stable than affordable housing. So looking at the America's economy, a lot of people have the idea that unemployment rate is going high, right? There's unemployment rate issues. A lot of the unemployment rates we're seeing in a sense are not people who are having the high income, are mainly the low income, right? Labor intensive jobs, right? So when it comes to the higher price rentals, people who can afford it are looking at salaries above $200,000 a month. A year, right? So that's let's say 70% of our renters have an income above $200,000 a year. So they are less likely to be priced out of the market when the market downturns. They're actually more likely to increase in their salary as they are more effective in their job delivery.
You touched a little bit on Trump. In fact, that was a really good slide, and you answered a lot of my questions about the big, beautiful bill.
Yes.
The recent announcement, or at least the attempt to reduce or waive capital gains.
Yes.
On property, is that being done? Is that done already? Is it cooked, or?
Yeah, let me answer that. So technically, capital gains is staying the same.
Right.
So if you have capital gains, you are still obliged to pay capital gains. But if you roll over to your next property, you have the tax deduction that you can carry over to the next property. So if you are an individual buying property and selling property, you're always buying and selling, you won't necessarily be affected by the capital gains until you exit your final property. But when it comes to a fund structure, company structure, we have been doing this for 30 years. So we're always benefiting in that cycle. We're always buying, exiting. So the capital gains tax does affect us in a certain extent, but we are able to mitigate that by continuous investment through our 32 fund cycles.
So I don't know if you guys saw the news a couple of days ago. There was a bit of a scam in Niseko in Japan.
Oh, yeah.
Where there are these developers, or at least these project managers, who are co-marketing with a Hong Kong team. They had a fantastic display out at Grand Hyatt, and they're marketing these high-end, medium, they're more like mid-level apartments on a pre-sale basis, but they were structured as investment products. And so